Hello and welcome to the Fibonacci premium video for Wednesday, March 23rd. This is David Starr, and as we've been doing a lot recently, we're going to dig into the S&P 500 here this evening because I think that's going to continue to tell us the dominant direction of the market. Now, as we look into it, we're going to continue using all of the tools we have at our disposal. That's classic Fibonacci analysis. That's going to be our voodoo lines, right, which is a variant of Fibonacci analysis that incorporates some very long-term Elliott waves and Elliott wave analysis itself, plus some indicators if they play into it. And one of the reasons we're going to use all of these things is that not only, as you'll see as we get into this, are they going to work very well together, but it lets us pick and choose those things which are working particularly well, including the voodoo lines and the voodoo line roadmaps, which let us factor in the different importance of these levels, right? Look, to start off the week last week, I was still bearish, right? But we were saying that maintaining that bearish view required that we stay below this 43.52 voodoo snow line. And midweek, not only did we get above that level, we tested it for support and it held, and that sent us up. Now, from a roadmap perspective, that's going to have us targeting, not insisting that we reach, but at least considering a target up here at 45.18, the companion voodoo snowline level. And then we monitor these intermediate levels, the skylines here at 44.15 and 44.54 to see if we are going to reach that level, right? That also had us thinking that this could be meaningful resistance, at least on a short-term basis, for the kind of pullback that we had, right? And so we were targeting that level. We hit it yesterday and did in fact come back to really our first decision spot here today, which is that 44.54 skyline, the skyline just below that snowline level. Now, as I mentioned, this is really our first decision spot in the move down from yesterday's attempt to get above 45.18, one that failed, right? And we'll parse this in a little more detail with short-term charts in just a little bit, right? But before we do, let's talk about the bigger picture, right? The bigger picture from a voodoo roadmap perspective is going to say that, look, this might, failing this level as we have, might send us back down to this 43.52 area where we have, again, the companion snow line to this one here at 45.18. Important in whether we get there is how we navigate 44.54 and then 44.15. And we did come down and close pretty much right at this 44.54 level today. Right, so obviously from a roadmap perspective, if we bounce from here, that sends us back up to 45.18, and if we test and find support above there, that's bullish. Now, meanwhile, getting below 44.15 leaves the door open probably pretty straight towards this 43.52 area, and I'm thinking not strictly from the voodoo roadmap analysis, from other analysis we'll incorporate later, that if we do break 44.15, that we won't just test 43.52, but likely break it. But we'll talk about that when we get to it, right? The pure voodoo roadmap analysis would say, hey, if we break 44.15, then at least we're going to continue down and test 43.52. Now, as we dig into smaller time frames, there are a few more things that we can add to the importance of this 44.54 level, and it's this, right? We come down, right, from yesterday's high to a swing low just after the open. We bounce after that to pretty much just shy of a 61.8 retrace. We don't need to measure that because we've already turned back down from it. The point is moot now. Just, I think, useful to recognize how we continue to move from these important fib proportions. And then if we come in and look at this leg down, right, from our high of the day, from this from this late morning bounce that we had. The subsequent leg back down right into today's low. Well, that would be equal to this initial leg down, a little lower than where we got to, right? Down here at 44.52 and 56 cents. So 2 points below this 44.54 skyline level that we've been looking at, right? If we measure the low to high swing here, up off the morning low into our high of the day, well, then the move down, 161.8%, the length of the vertical move in the bounce, right down here at 44.56 and 45 cents, right? Just about 2 points above that skyline. So there are a lot of things which come in here. And then another proportion, right? If we just look at the start of this move down from the high, project down a symmetry level right in here, those would have been equal, right at that skyline level. So we did end up a little shy of the skyline. The bell rang as we were pushing down towards it. And so we'll see from here how things come together tomorrow, but on a short-term basis, there are a lot of levels which all line up here. And while that doesn't tell us we didn't get enough time after we reached down here, because that bell did ring, to see if we bounced enough to get any sort of trigger at all. It is certainly, you can see from coming right in a zone where we have a lot of levels of interest right in here, all coming together. So really is a spot where if we're going to bounce nearby, that I think that bounce would be likely to come in, and a reason to watch this going into tomorrow. But there is, in fact, even more than that if we come in and start to take a look at this from the Elliott wave perspective as well, right? So we've started with pure voodoo lines. We've come in, we've added in, right? We've added in some fib analysis to see why this is a particularly interesting support area here, right around that skyline. And then, right, we know that if this is, in fact, going to turn back up, right, Elliott wave tells us that moves in the direction of trend, say for example, this move up from Monday's low into yesterday's high, right, those have a 1, 2, 3, 4, 5 wave move, where wave 3 usually, but not always, the longest and strongest, but certainly that's the most typical appearance, right? Waves 1 and 5, similar in length, right? And where we make sure that wave 4 doesn't come back and re-enter the territory of wave 1. This is a classic appearance to a 5 wave move. Meanwhile, the counter trend moves, and if we were to turn back up from this skyline area, we would expect the pullback to be a counter trend retracement, right? Counter trend moves are instead 3 wave affairs, right? A, and then B, and then a C wave down. That C wave is obscured right here by some of these fib proportions. So let me remove those for now. We can re-add them. We can re-add them later if we want to look at it more. Now, the thing that we want to further add into this, right, is that when we do have a 3 wave move in its most typical presentation like this, that we want to recognize that that the A wave and the C wave, right, those legs of the 3 wave move that are going in the same direction as the move itself, because they're going in the same direction as the move itself, they should have each a 5 wave move inside of them, right? Meanwhile, the B wave, the bounce that goes in the opposite direction of this whole proposed 3 wave move to the downside, that should have a 3 wave move inside of it. And we do pretty easily see these. Now we have to drill all the way into a 1-minute chart to see that this wave A to the downside has a 5 wave structure within it. But if we do drill into that 1-minute chart, we can see, right, yesterday afternoon, move down, little bounce before the close, a drop for wave 3, the longest and the strongest, right? A 4th wave bounce, that stays well clear of wave 1 down. Fifth wave to the downside, similar, not exactly the same, but similar length as the move down in wave 1, exactly what we would expect. Meanwhile, as I said, even just because it helps us verify, right? A, B, C, three-wave bounce here midday, just shy of 61.8%. The length of the decline down from yesterday's high to this early morning low that we had, and then we start heading down again. So if this subsequent move down was going to finish an ABC correction, then what we would expect to see is that in that C wave down, we would have a 5-wave structure as well. So that would be 1, 2, 3, 4. 4 is a little awkward. One of these things we call a flat correction, but that's okay, right? It finishes up, and then we go down here in wave 5, and again, wave 3, the longest and the strongest, and these moves going in the same direction like a wave 3 from here to here. When a structure is visible, we would expect to see it having a 5-wave structure within it as well, but going over all of that detail might be gilding the lily a little bit, right? But wave 3 down, the longest and the strongest. Wave 1 and wave 5, very similar in length. Remember, when we looked at the pure fib analysis, we measured some symmetry. We measured this move down and projected it down from here, right, to see where this leg might be symmetrical to prior to prior moves from swings in the same direction, and that equality measure came in pretty much right at that voodoo skyline. And so the reason we measured that was not just because symmetry is a useful concept for measuring moves in and of itself, but when we integrate both our fib and our Elliott wave, they inform each other, and this tells us particular swings that we want to look at. And everything continues to point, right, not only to the importance of these levels because things keep measuring there, but this also gives us a way to potentially see a reasonably complete pattern at this level. And that also helps with the idea that we might, and it's still a might, right, but we might get a bounce from here, because not only do we have a lot of measurements which come together in this area, but we can actually see the pattern having done enough to plausibly be complete. Now, as always, no trigger, no trade, right? So we ended the day without any chance for a bounce to see something that could be considered a trigger. And usually when we could use an indicator trigger, we could use a moving average cross, we could look for a move above the high of the low bar in some time frame, we could use ready aim fire. There are a number of tools we can use from a pure Elliott wave standpoint. We can look at a 1, 2, 3, 4, 5 wave move, right, and see if we come back above the 4th wave. And then another tool that we can turn to, that we talked about a little bit in the live midday session today in the room, is a break above, right, a trend line connecting the start of what we think might be an A, B, C move down, draw that line through the end of the B wave, right? And if we can get a break above that stays above that trend line, that also would be an early indication that things could be done. Now, we know that we can get movement overnight, and that could go a bunch of different ways. So one way that this could go, of course, is that we gap up well above this area, right? And that might be a little too late to get a trade on. But if we don't gap up too much, come modestly above here, modestly above this descending trend line, that would perhaps be a good entry. Now, getting beyond the B wave of a 3-wave correction is often an even more compelling signal, but we'd be well on our way back up at that point, right? So, look, with all of that said, there are a few other levels I want to cite for you as this is getting on a little bit in time. The other is one that we talked about in last night's Elliott wave dispatch, although we didn't go through it in as much detail as we can today. It's the 23.6% retrace of the leg up from last Monday's low into yesterday's high, right? That's a typical proportion, along with the 38.6 retrace, for a fourth wave. We're also looking for something that comes into the range that, from this high to this low. We're already inside of that range. The 23.6 is inside that. The 38.2 is not, which is a reason to look at this level. It's also at a spot where the C wave down would be roughly 127.2%, the length of it, the A wave down, another relatively typical proportion for an ABC correction. So if we break a little bit lower here, bulls really need to see this hold support kind of in this 44.35 to 44.40 area in the cash S&P 500. Holding there, getting back up above the skyline is what bulls need. What bears need is breaking 44.15. If we do turn up from here, starting right at the outset tomorrow, some initial objectives, because really, if this is bullish, we're probably in the segment here where we're kind of in latter stages of third waves, right? We have 1, 2, and then a circle 3 up, circle 3 inside of it would have 1, 2, 3, 4, 5, right? So we have 4, 5 and 4, 5 in the latter stages where things don't, or aren't necessarily quite as frisky to the upside. So some places we could look to if we come in here, and the wave patterns here are not as clear as I would like to insist that this has to be bullish. But if we do turn up from this level, let's say that initial targets, right, for the next leg up would be rid of this 138.2 so that we can see the others, right? So we've got a 1272 in here at 45.39. First target, that's 127.2%. The length of this move down. Next target up would be 161.8. The very last thing that I will mention here this evening is that, one of the things that we were considering in the room was adding a trade to the Voodoo Mastery portfolio down here at this, if we did get this three-wave corrective move down into the Voodoo skyline or somewhere similar, that's exactly what we got today. But again, we reached there right at the end of the day. No real chance to put things on. And that does suggest that for those of you who are futures traders, there may be an opportunity to try and trade this overnight. And one of the reasons I like doing that in the futures rather than just putting a trade on blindly at the end of the day is it does give an opportunity to try and or to manage that trade, right? So while I do find that the proportions that we find doing fib work as well as the patterns for the Elliott wave work best when we do things in the cash market. A lot of times what we can end up seeing is that we'll get perhaps follow through in the overnight session where things might drop, lower here and still end up before the morning, right? So picking a spot on some pullback, whether it's lower here or getting a little pullback to get in, allows one to scalp in, take a little partial profits, raise stops to break even, and not get hurt in the overnight action because the futures are going to trade through the evening. So for those of you who are futures traders, have futures accounts, are familiar with managing your risk overnight, I do kind of like this idea, again, if one can get a setup and manage risk, not because it's certain that we're going to reflect at this level, but because we could, and that allows a way for one to get some exposure in case we do gap up and it doesn't look as compelling to add options exposure. So that's what I have here for this evening. I hope you found it useful, and I will see you at the next update.